Rob Luna is CEO and Chief Investment Strategist at Surevest, a CI financial company, joining us live from Newport Beach, California. It's great to see you, Rob. Thanks very much for taking out the time, evening your side. Let me start off there. So far, one thing that's been supporting the markets, one variable, has been earnings growth, right? Every single quarter we've seen earnings beating expectations. Does that continue in 2022, or does inflation alter the story?
Well, I think it's going to depend on the company, right? There's some companies that are going to have the ability to pass on prices to consumers. I think technology is one of those places. But, at the same time, you look at companies like Costco who have already raised rates. They've done a lot of that work. I think everyone's been listening to you were just talking about this whole transitory notion. I think companies, consumers are starting to get their arms around the idea it might not be so transitory. Also, keep in mind, we've had huge year-over-year growth, so we're going to have a much higher hurdle that we need to get crossed. So I think next year is definitely shaping up to be a year where it's going to be tougher comparisons, a lot more difficult for companies to beat, and those people who are impacted by the supply chain are going to be at a disadvantage.
Yeah, and so what does this mean for tech businesses? We had Ashwath Damodaran yesterday who said that, even in a rising interest rate environment with rising risk on inflation, you could find cover in tech.
Yeah, I think so. I think tech is in a much different position than it used to be before. Tech is really facilitating the way we live our daily lives. And what we saw last year, and I think as we now start talking about this Omicron virus, tech was the most resilient in that space. So we saw Zoom come out of that last year. Now you're starting to hear this whole area of the metaverse and companies like Roblox. And when you look at the potential growth that they have and the low penetration of the market, there's no area like tech that's going to be as resilient in something like Omicron coming on, the ability to scale up quickly and the ability to be able to maintain their margins, because obviously if you're packaging software, you're creating a platform like Roblox, you're immune to that supply chain and some of the inflation that's.
Are you suggesting you would buy these names, Meta, Block, new ones?
Well, I can only tell you what I'm doing with my own money. I'm buying them. I've been buying Roblox on the dips. I think companies like NVIDIA have a long way to go. That being said, we're obviously going to see some volatility up and down. I know a lot of people this week are very nervous. We saw some of those companies get hit. But look, Tanvir, we're only 3.5% off of all-time highs, and we're acting like this is the end of the world. I think investors going into next year are actually going to be able to have some cover, but it might not be the old tech names. It's going to be some of these new names like we're talking about now.
Yeah, and you're also talking about Google, you're talking about the Bank of America, GS, Goldman Sachs, that is. Financials, let's talk about that for a bit. Do you think that a major chunk of the rally has already happened? Is there more to come if rates go up?
I think a lot of it has.
And depending on how fast they go up.
Some of these companies are really not that stretched. The reason I like Bank of America in the short term is they're one of the banks that has the most exposure to net interest margins. So as we see rates tick up, if you're looking for a balance sheet that's going to have the most opportunity and profitability from something like that, that would be Bank of America. When you look at Goldman Sachs, they're participating obviously in this big rally. A lot of their money comes from, their profits from AUM, assets under management. And as all assets have been rising, they've been a benefactor, but also behind the scenes, you look at Marcus and some of the things they're doing on the consumer protection side, they're also going to be able to benefit from those rising margins. So that's my top pick in the sector, Goldman Sachs. But to like I was saying, I really like this inflation barbell, if you will, of having these high-tech growth companies. But if inflation does become an issue, even though I think these tech companies will be able to get past it, we see trading, we see momentum. Those names are going to get hit, even though the numbers might not reflect it in the short run, and that money is going to rotate in some of the banks. So I think going into next year, having those two types of assets on your equity exposure are going to give you some cover.
And it's interesting that gaming also finds a role in your portfolio. Roblox is something that you like.
Yeah, I love Roblox. I mean, this is one of those things that my daughter's been playing it for a couple of years. I was a little bit skeptical and hesitant, but you look at the growth that this company is having. I think one thing for older investors, people in their 40s and beyond like myself, This whole idea of NFTs and buying digital assets doesn't really make a lot of sense to them. But this younger generation, they've grown up buying digital assets. There's a lot of value. And if you think of something, if you're a company that can create a digital asset versus something away from the supply chain, away from inflation, and continually sell that, just like we saw when companies like Adobe went from this packaged software to software as a service, this is a trend that I think you want to be on. It's more than just gaming. They're creating a platform for companies like Amazon partnering with them, Nike, some of the luxury brands. This is going to be, it's like saying Amazon was books in '98. This is a platform that I think is going to have expansion way beyond gaming.
Yeah, especially if you have kids, you have a better sense of how the future would look like with these businesses. Rob, do you think regulation would put a lid on their growth?
Yeah, regulation is always an issue, right? I mean, I was just looking right now in terms of NVIDIA, which is a company I've liked. There's, a possible lawsuit now coming out with the acquisition of ARM Holdings. So look, regulation is always going to be an issue, especially in technology. We've seen that going back to when I got in this market in the 90s with Microsoft and Intel and so forth. But look, I think if you're making an investable longer-term theme, while you want to be cognizant of it, I would not let that dissuade you from getting into some of these names that I think are going to be the highest growth names in the next 5 years.
What is the biggest risk to your outlook in 2022? Is it growth worries because of new variants, vaccine evasion, stuff like that, or is it really inflation and the ripple effects?
Yeah, I mean, I think inflation is definitely a challenge, right? I think the supply chain, especially if you look at the supply chain as it relates to this new Omicron variant, look, we don't know enough about it yet. Just like the Delta came out, markets got hit, wound up not being an issue. We don't know how contagious it is. We don't know how far it's going to spread. We don't know how quick some of these companies are going to be able to come up with a vaccine. So I don't want to discount that it could be a big issue that we're not aware of right now. That being said, it's not 2019 where we didn't have this threat out there. We saw the companies that would be able to succeed in that environment. So use that same playbook. If the world locks down again, what are the companies that are going to do well? I do think that's a risk, but I'm even more concerned about runaway inflation now than I've ever been before. There's a supply chain shortage. There's a housing shortage. Everyone's worried about the dollar. They're rushing into investable assets. The definition of inflation is too much money chasing too few goods and services, and we're seeing that everywhere.
Yeah, and liquidity may also face challenges, right, with rates going up. Last year, Rob, in December, and this is my final question, in December, I asked a lot of investors about what the year-end target 2021 would be for the S&P 500. We're pretty much there. 4,500, 4,600 was the target that was laid out by a majority of the investors I spoke to and analysts I spoke to. 12 months hence, where do you think the S&P would be?
Yeah, I'm not one of those analysts who's on camera talking about 12 months targets. We tend to be bottoms up investors, so I don't really look at the S&P 500. So I don't want to put anything out there. That being said, I think there's going to be pockets of opportunity that you could absolutely see double-digit growth. And like I said, putting myself on the line, I think if you put this barbell together of high quality, high growth tech and financials, you could easily see 10 to 15% upside.
Great to have you in the show, Rob. Thank you very much for joining us. Enjoy your Friday when Friday arrives for you.